Hey guys, welcome back to the channel McNallie Money, home of all things stock, investment, and personal finance related. Now for today's video, we've got a special guest for you. We're going to be joined by the CEO of Riot Platforms to talk about his company and give us an update on their strategy moving into the back half of 2023. We've got a lot to talk about in today's interview, but before we get into it, please take a second, hit the like button, you guys. It's a big help to myself and the channel. If you're not already subscribed, McNallie Money, feel free to join. And let me know in the comment section below what you think about Jason's comments, your thoughts on Riot as a company overall, and your prediction for Bitcoin moving into next year's halving event. Now with that being said, let's get into today's interview. Okay guys, so that's right. Today's video, we're joined by a special guest, the CEO of Riot Platforms, Jason Less, excited to talk about his company and ask some questions in relation to his business. So Jason, thanks so much for being with us here today.
Thanks for having me, Bryce. Happy to be on.
Right on. Yeah, no, it's been a long time coming. Now, Jason, for people who are unfamiliar with yourself and Riot, since it's the first time you're actually on, I know we've covered the company in previous videos, but can you give us a little bit of context as to your background personally and how you ended up with Riot?
Sure. So my name is Jason Less. I'm the CEO of Riot Platforms. I joined Riot on the advisory board in 2017 and then joined the board of directors, then became CEO in 2021. I came from a more technical background. I first became exposed to Bitcoin and was involved in Bitcoin about 10 years ago. And I was very interested in the economics of Bitcoin. I was very interested in the freedom that Bitcoin made possible. And because my background was in computer science, I went down the direction of really trying to learn how Bitcoin works. So I learned about Bitcoin from a development standpoint. I did my own individual mining. And to be honest, I never had an anticipation of working in this industry. I just knew that I was committed to Bitcoin and I wanted to be involved around Bitcoin just from a personal perspective. And then when the Riot opportunity came along, I was incredibly excited about the potential there and extremely happy that had the opportunity to join the company here and grow it from what it was in 2017 to where we are today.
Yeah, it's super interesting. I'm laughing because I've been hearing about like the orange pill analogy, and it seems to everybody, it's like gold fever, right? As soon as you get involved with Bitcoin, you just go down the rabbit hole, and I'm finding myself doing the same thing as you, Jason, so that's great. Now, in terms of Riot's operations, you guys are one of the biggest, most efficient miners out there. I personally hold shares in your company. Can you tell us a bit about your operations?
Yeah, so Riot is a Bitcoin company. Our core focus in Bitcoin mining, and everything we do goes around supporting that core focus. Our operations consist of two facilities, one that's been in operation for some time, and then a second facility we're working on still. Our Rockdale facility is a 700 megawatt facility, and as far as we're aware, is the largest Bitcoin mining facility in the world as measured by developed capacity. So that's out in Rockdale, Texas. We have 10.5 exahash of hash rate capacity there. And we're working on repairing a building right now. And when that's complete, will take us to 12.5 exahash. So huge hash rate footprint out there in Texas. We're also very active in the ERCOT energy market. We have a proprietary power strategy where we have fixed cost of power, and we're putting that to work to drive a low cost of production, but also help support the grid stability and financially benefit when the price of energy goes high in ERCOT. So because of that, we've been able to drive a very low cost of production in Bitcoin mining. We're also working on a second facility in Corsicana, Texas, just 2 hours away. As you can tell, we love operating in Texas. Texas is a state focused on individual freedom. It's a very business-friendly state and has proven to be a very Bitcoin and Bitcoin mining friendly state. The lawmakers we talk to, the policymakers we engage with, most of them, a large proportion of them get it, and they're very excited about what's happening with Bitcoin and Bitcoin mining in Texas. So our new site in Corsicana, Texas, that we're building right now has a total capacity of 1 gigawatt. And the first phase we're working on is 400 megawatts, all immersion cooled technology. And we just recently announced a minor purchase order Monday, and we've at least committed to adding so far 7.6 exahash of next generation equipment out there in Corsicana. So we're focused on increasing our Bitcoin mining footprint. We're focused on leveraging our low cost of production and positioning ourselves for the upside with Bitcoin.
Yeah, exciting stuff. And we're going to talk about that big purchase order because I know there's some optionality there to expand that. I did want to bring this up though while I had you, Jason. A few viewers have brought up the fact that Texas is great. There's a lot of freedom there and great business operating climate. But due to the heat in the summer and the demands on the grid for AC and stuff like that, there are some energy curtailments. And I saw those were just starting to come into play. Do those impact your operations at all?
So we're very involved with the managing our power on the ERCOT grid. Now, I think there's some distinction that's important to walk through. We do not have any mandatory curtailment requirements.
Okay.
We only curtail if the market conditions indicate such, or if one of the demand response programs we're participating in ERCOT calls on us to curtail. So let me walk through our power strategy at a high level here. The core part of our power strategy is the fact that we have 345 megawatts of low cost power secured 24/7, 365 through, there's varying periods, but 2027 and 2030. So for 345 megawatts, our cost of power is fixed. Anything over that, we pay market. The market price of power is generally very, very competitive in Texas outside of the extreme events. When these extreme events happen, and the market price of power shoots up because demand is high and supply is more constrained, whereas other miners may have to curtail just because they cannot pay that high energy price or do not want to pay that high energy price, we will be able to curtail, but we're able to essentially make our power, we sell that back to our retail electric provider at the market price, and we capture that benefit. So we are not limited necessarily by the price of power going up in ERCOT. We have the opportunity to benefit from that, and that's because we committed substantial financial resources, meeting collateral requirements to have those fixed blocks of power or power hedges over the long term. We also participate in ancillary services. This is another part of curtailment, another type of demand response program in ERCOT. The way you can think about ancillary services is if you have that fixed block of power, as we do, you can sell ERCOT the right to curtail your load at specific hours of the day or whatever types of volume of power you want to put into that. So once again, that's voluntary. We're not required to do that. But we are able to lower our cost of power by doing that because we're selling ERCOT that option. And ERCOT does not always call on that option. So we're getting paid to sell that, but we don't even always have to curtail our power operations. I mean, our Bitcoin mining operations. More often than not, it's not curtailed. It's simply a very useful tool that ERCOT has to manage the frequency on the grid, to manage the amount of capacity available. That's a great feature that Bitcoin mining has. There are very few, if any, other loads out there with the same size of Bitcoin mining that you can flip on and off and help stabilize the grid. So we do this for a financial benefit. We do this to help drive a low cost of production. And we also do this to be a good corporate citizen in the community we operate in and demonstrate the very positive impact that Bitcoin mining has on energy grids.
Great. Yeah, I wanted to get your context because it's so interesting. Bitcoin miners were made out to be these huge energy monsters, and it's really turned almost fully around now, and they're seen as some way to regulate the demand and expand the energy market overall. So the key takeaway there, I guess, is the curtailments for you guys are optional, and you've structured it in a way it actually works to your financial benefit. It sounds like, eh?
Yeah, that's exactly right. And there's one more program I wanted to mention that people hear a lot. It's called 4CP. And 4CP stands for 4 Coincidental Peaks. It runs over the summer months in ERCOT, June, July, August, September. And during these months, ERCOT will send out a notice to curtail load. And typically, these notice periods are a few hours. They occur about 80 times over the summer. But if you participate in each of the four peaks over those months, then you do not have to pay transmission cost on your power in a future year. So that's something we participated in every year that once again helps reduce our cost of power, and it takes off our load when that demand for power is the highest. So when you see the headlines about this demand for power being so high in Texas on these peak days, you can know Bitcoin mining is not one of them.
Fair enough. And that's exactly why I wanted that explanation, because there's always more than meets the eye. So next question, you've kind of set us up pretty nicely in terms of a segue. What, in your opinion, are the key differentiators for Riot? I know we've already touched on size. Some of these energy contracts are quite unique. What else separates you from the pack here, Jason?
Yeah, we have one of the largest hash rates, like you just noted. That power strategy is a key differentiator. It really helps us drive a low cost of production and gives us a lot more control over our cost of power. I'm not aware of another miner that has that volume of power under a fixed price blocks in Texas. I think the other thing that's really important about us is our vertically integrated strategy. We're focused on owning and operating our own infrastructure. We don't host miners. We don't outsource the management of our infrastructure. We have built an incredible team that has now have years of experience building and operating Bitcoin mining infrastructure, which is a skill set that's not that distributed out there. This is a new industry. There's not many people that have years of experience in building and operating Bitcoin mining infrastructure. So that's part of our vertically integrated strategy, to have that expertise and to own our own infrastructure and not rely on third parties. Other key part of our vertically integrated strategy is a company that we own, a wholly owned subsidiary called ESS Metron. ESS Metron engineers and manufactures electrical equipment, switchgear, power distribution units, etc. Now, they are a strong business on their own, serving data center, generation clients, and other types of industries. But since they're under the Riot umbrella, they help us immensely with building our Bitcoin mining infrastructure. As you can imagine, there's a lot of engineering and electrical gear that goes into operating these large facilities. So we have a company that helps prioritize us, produces that in-house, helps us engineer the specific type of equipment we need, helps us get the lowest cost we can, and I think most importantly, help manage and give us greater visibility over that supply chain. In a time when so much equipment and so many specific parts needed for that equipment is hard to source, we have the guys that are, in that game 24/7 that are able to help us secure that equipment. So that really helps de-risk our expansion and makes us even better at building this Bitcoin mining infrastructure. And one final differentiator I'll throw in before turn it back to you, Bryce, is Riot has an extremely strong balance sheet. Riot has no long-term debt. We ended the first quarter with around $150 million in cash and over 7,000 in Bitcoin, unencumbered Bitcoin. So we have a very strong cash position and no owner's debt, which makes it one, going back to the power strategy, helps support those power agreements we have, gives us a lot of staying power when you go through these volatile cycles in Bitcoin, and helps us be opportunistic and expand our business in times like this, building new facilities, buying new hash rate when prices are cheap.
Yeah, I absolutely love it. And that's why I did invest in this company. You've got people like Hut 8 who've got a big HODL strategy, Bitfarms who are big production, and then Riot who's got both, which I really like as an investor. And you talk about the vertical integrated strategy. Most of my portfolio follows suit with that. And I think what's interesting there, Jason, is some of these hosting contracts, they're great in times like right now when Bitcoin price is depressed. But if we see a huge run, I think a lot of these companies are going to start to really play with those contracts. And it could hurt the companies that are not vertically integrated like Riot. So appreciate you shedding some light there. Now, next question, we alluded to this a couple minutes ago. You guys just picked up a huge purchase, 7.6 exahash worth of capacity of miners. You said there's an option to actually get more out of that agreement. So can you talk to us about that a little bit?
Yeah, so this was a huge purchase order for us. Riot has in the past been on the front of the pack, entering new miner purchase agreements, growing our hash rate. And we haven't market hasn't heard from us in that area in about 18 months or so. We've been focused on executing on our prior plans, and then we've been focused on building out our new ones. However, in the background, we have spent a ton of time evaluating hardware, testing hardware at our Rockdale facility, talking with different partners to make the best decision we can for building hash rate for Corsicana. And what we landed on was a long-term agreement with MicroBT to purchase approximately 33,000 of their immersion cooled specific miners. This is a miner that maybe most people are not familiar with yet. It's a relatively new product, but it's designed specifically for immersion, optimized for those conditions. So in the past, when you've done immersion cooling, you've had to buy just the standard out-of-the-box miner, and you have to make it work for immersion. You have to take it apart a little, you have to take the fans off, you have to do some things with the miner after that, and that's a lot of labor. You're taking something to make it work in immersion, although it wasn't specifically geared for that. So the fact that this miner by MicroBT, the M56 S Plus and Plus Plus miner, are designed for immersion allows us to simplify our operations and even further take advantage of that operating environment. So with these 33,280 miners, we're adding 7.6 exahash, which, to put in perspective, is about 60%, a little over 60% of our current hash rate capacity that we're anticipating to achieve this year. So with already one of the largest fleets of miners in the industry, we're about to increase by about 60% when fully deployed in 2024. That's a big jump. And this is next generation hardware. We're focused on having efficient hardware ahead of the halving. The blended efficiency of the miners that we've ordered here is about 22.5 joules per terahash. So pretty close to what the S19 XP is. Further, we have an option to purchase another approximately 66,000 miners of the M56S++, which is 22 joules per terahash. We see very low price for hash rate right now. Mm-hmm. So we wanted to lock in that price, and we wanted to lock in the supply of additional miners as we built out the facility in the future and have that optionality there to grow our hash rate even more. So if we fully exercise this option, which runs through the end of 2024, if we fully exercise this option, our hash rate capacity would potentially be 35 exahash. So a huge growth runway here, big. The final really exciting part about this order is these machines are manufactured in the United States. As far as I'm aware, this is the first large order of any miner, of any Bitcoin mining ASIC that is being manufactured in the United States. MicroBT has invested in having a footprint here in the United States. So instead of traditional miners that are manufactured in Asia, you have to pay very expensive shipping costs, and you have to deal with customs and all these logistics to get the miners over there, which at the quantity we operate at the scale we operate at, is a huge endeavor. Mm-hmm. Now we are purchasing miners that are being manufactured in Pennsylvania and just going to be put on a truck and then go straight to Texas. There's a slight additional fee for the U.S. manufacturing, but that is offset by the savings in, not having to charter jets to take, miners over from Asia into the United States. So we're very happy about this. We think this is a great first step for the industry. Bitcoin is all about decentralization. Historically, hash rate has been produced in Asia, and now we're going to have hash rate produced here in the United States, which we think is terrific for the industry.
Yeah, how exciting. And I didn't know that point around these are specifically made for the infusion cooled like that. So that's great. Yeah, and the other question I had, you said this additional 7.6 exahash would be online in 2024. What quarter are you guys targeting for that, Jason?
These deployments will start in Q1. Okay. And I think we expect all of those miners to be energized by the second half of the year. So focused on, obviously we're sensitive on the halving. We want to try to get as much hash rate deployed ahead of the halving as possible. But we expect to get all of that deployed through the middle of 2024.
Sure, and we talked about this in our last video, but for those of you who aren't super familiar with Bitcoin halving, essentially the rewards cut in half. So said another way, energy costs would double per Bitcoin, assuming everything else stays the same. And that's why it's so important to have these efficient machines, these next generation miners that Jason's talking about here. So again, a nice segue there. What would you say is your biggest focus at the company and as a CEO moving into the halving event?
So, when you say into the halving event, my mind went another direction. So I'm going to give you two answers here. First, the key focus going into the halving is all about a low cost of production. So like you just touched on, Bryce, that's exemplified in the focus on buying more efficient hardware, improving the overall fleet efficiency of our entire fleet. We're very focused on our power strategy. We talked about the different levers and tools to work with in ERCOT on that, and we are extremely focused on further optimizing that to drive the lowest cost of production. We're focused on improving the overall efficiency of our operations. That's a core focus we have as a company in 2023, and we'll continue this in future years, of course. The other focus that we have right now is building out our tremendously talented team. People think about Bitcoin mining as just a bunch of miners on racks and on buildings, etc., which it is. But at the scale that we operate, at the speed and efficiency that Riot operates, it requires an incredibly talented group of individuals to do that. So we are not only building new and industry-leading Bitcoin mining operations, we believe we are building the first truly institutional Bitcoin mining company. We are focused on being institutionally investable, and we're focused on building out with the core functionality that we need to execute on opportunities rapidly and with the appropriate attention to detail. So two areas to your two directions to your question there, Bryce. One, focused on the power and efficiency to drive the lowest cost possible coming into this halving, and then two, building out the team to make that happen.
Gotcha. Yeah, the institutional investor is interesting, and we were talking beforehand about the spot ETFs for Bitcoin and some of the attention we're starting to see from BlackRock and the likes. And I think that's super critical that you have a focus on that, Jason, to make this stock investable to that type of group, and hopefully that'll definitely drive volume and share price down the road. So this was great, super informative. Anything we didn't touch on that you'd like to throw in here?
I think that we are approaching some exciting times with Bitcoin mining. I think a theme of our conversation today, Bryce, has been about the halving, and that's coming up. Always I'll call it exciting time because of the uncertainty that people have about how this event is going to take place. Riot went through the 2020 halving, and I think one of the things that made us very successful coming out of that is the investment that we made in growing our fleet around that time. There's a lot of uncertainty in many investors' minds coming around the halving. They see the rewards getting cut in half, and obviously if the network difficulty doesn't adjust or the price doesn't increase, that would have an impact, negative impact on Bitcoin miners' economics. So it becomes a time when a lot of miners are focused on hunkering down and surviving. And because of the way we positioned ourselves with our balance sheet and the expertise we have, we see this as a time of opportunity. So just as in 2019 and 2020, we focused on improving and expanding the size of our Bitcoin mining fleet, our hash rate, we're focused on that now. And we're optimistic of what this business is going to look like on the other side of that halving in 2024.
Very interesting point, and it is going to be crucial for some of these smaller miners or people with not as great a balance sheet to really see how they navigate this halving. And again, that's why I feel confident with my investment with you guys. That's perfect, Jason. I think we got through everything we wanted today. I really appreciate you for your time. We'd love to have you back on in a couple months here to talk about how things are progressing. For anyone who's still watching the video, you guys, make sure you hit the like button. If you're not subscribed to the channel, McNallie Money, feel free to join. And if you have any questions for Riot that we didn't get through in today's video, leave them in the comment section below. I'll make sure to add them to the list for the next time we talk with the team here. Jason, any closing thoughts? Where can people get more information if they want to invest here?
Yeah, first off, Bryce, thanks for having me on. Great to have a conversation with you. Appreciate the opportunity to talk about Riot, and we'll definitely hop on here again in the future, talk about updates that have happened since this conversation. Riot is publicly traded on NASDAQ with the symbol RIOT. You can follow us on Twitter at Riot Platforms, and our website, riotplatforms.com. So we put out a lot of good content on our Twitter videos that show what we have going on. We put out monthly updates with a lot of good information. So, follow Riot on Twitter and, stay tuned.
Sounds good. Appreciate the time. Have a good day, everyone.